What's up everybody? Welcome to the Stocks channel. My name is Cory, and today in the weekend video, we're going to take a macro level view at the stock market and try to figure out where exactly the stock market is heading going into next week. We did have a very bullish week and there is a lot to cover today. So let's crack open this chart and see what's going on in the stock market today. Alright, so first up we're going to take a look at the S&P 500 SPX index, and these are weekly charts, so each candlestick does represent one entire week's worth of price action. So you can see we had a very bullish week and we did actually open a gap on a weekly chart. Now gaps typically get filled, but this gap is very unique in the sense that Good Friday was a holiday, so the market was actually closed on Friday. So I do think that gap is significant, but we don't want to put too much weight on that gap because it is most likely compensating for that Friday that the market was closed. Now you can see that gap did not stop the market from going higher this week, and that gap will likely get filled, but it likely won't get filled until we go through a correction. Right now, this market continues to melt up on low volume, and we haven't seen any sellers showing up all week long. Now, obviously, that can change at any point, and the higher we go, we want to get more and more defensive. That doesn't mean don't be in this market at all. That just means know your exit strategy very closely, and if you like stop losses, make sure you're setting them very tight because the selling will happen swiftly, and the stock market takes the stairs up and the elevator down. You can definitely see we're getting a little bit of a parabolic move here near the end of this cycle, and that's usually indicative of a blow off top. Usually in a blow off top scenario, we're going to see a spike in volume, and right now the volume is still relatively low, so it does imply that we could see higher prices. We're going to go into that last parabolic stretch, and we could see it next week, or we could see it not at all. So pay close attention to the new price targets I'm going to give you today, because those are very likely going to be where we see this market start to top out. Going back to our old price target, we did have it around 40.60, and we had no problem blasting through that price target last week. Now when we get to the NDX, it's going to make a lot more sense why the S&P 500 is getting so bullish and why we're actually likely to break through the next price target and go straight to the next one. So the next price target we need to pay attention to is 41.52. But I do think that level is going to break down, and I think we're more than likely going to see a possible blow off top scenario that brings us all the way up to about 43.06. Now I'll talk about more why I think that's a possibility when we get to the NDX, but just keep these two price targets in mind, 41.52 and 43.06. I also want to remind you on the Bear Bull survey that we're getting very bullish with retail sentiment, and this is a contrarian indication. Normally, the retail investors are on the wrong side, and we are seeing a very high amount of retail sentiment being bullish. At almost 57%, that is now the 1-year high, and the higher we see the bullish sentiment get, the more likely we're going to see that blow off top and a huge massive wave of selling to follow this high. So let's go back to the chart, and let's look very closely at what the price action did this week. So don't forget, we do have a gap that won't close until we get back into the low 4,000s, and we did close the week above the upper Bollinger Band. Now these Bollinger Bands do expand, and we will see an expansion of those bands going into next week, but let's switch this over to a monthly chart, and you can see for the month of April, we are now currently trading over top of the Bollinger Bands. We saw this with the Russell 2000, and you can see how that quickly brings in selling pressure, and it could either send a massive wave of selling into the market, or it goes through a sideways consolidation and the price action is going to stall out around these levels. So you can see if we do get all the way up there in that 4,300 level in the month of April, that's definitely going to be a blow off top scenario. More than likely, we'll find resistance right around that 41.52 level. But if we get that increase in volume and that huge FOMO wave at the very end of this cycle, we could blast through there and continue to go higher. So you can see the trend is still very bullish on these monthly charts, but it's definitely looking parabolic, and the 50 EMA is now curling up and it's starting to more aggressively slope to the upside. We could see the very similar thing on the weekly chart with the price action way above the 5 EMA, and that 5 EMA is starting to curl up and getting ready to go through a parabolic phase. For the most part though, these are still very strong bull trends, and I don't want you to try to call a top or short this market. This information is strictly to prepare you for what possibly could come once we hit these price targets. I'm not suggesting that you try to call a top and short at these levels and hope to make a ton of money. Bull markets can stay irrational far longer than you could ever imagine, and it's possible we get to any of these levels and we trade sideways and we correct through time. So just be very aware of how strong this bull market is, and I'm not in the business of calling a top. I just want you to be prepared for what could be coming, and I want you to see how far extended some of these prices are getting. So let's jump over to the NASDAQ 100 NDX index. And on the NDX, my price target for 2021 is still all the way up here at 14,488. Now from last week's close to that price target, that's an increase of about 4.5%. That would most likely help push the S&P 500 and the SPX index past that 4152 price target, and we could get closer to that 4300 level. That is a huge increase in the tech sector from these levels, and that one critical line in the sand that we needed to close above, we did get a close above this week. Remember that 13,717 was that key level that we had to close above, and we decisively closed above that level by over 100 points. You could see that we also have a gap open on this weekly chart on the NDX, but again, that could be from the Good Friday trading session because it was a holiday and the market was closed. So we want to pay attention to that gap, but it most likely won't get filled until we go through the next correction. So right now on the NDX, you can see that we're not trading above the upper Bollinger Band on this weekly chart. We're still maintaining a bull trend, and we have some really nice bullish price action from last week. Remember, the tech sector is the most beaten up because of that sector rotation, and the tech sector already has seen a correction. So it has the most to gain, and if money is looking for somewhere to go, it's more than likely gonna go into the big blue chip tech names because they are actually the lowest value right now. Even though they are still considered overvalued, they have the most potential upside. So the path of least resistance is still to the upside, so continue to watch this price target above, which is somewhere around 4.5% higher. Remember, that doesn't mean we're gonna get there in a straight line, but if we do see a blow off top scenario and we get way too far extended, way too fast, and that will lead to the massive wave of selling. So it's going to strictly depend how fast we get to these levels, and that will help dictate how fast we should see selling. The faster we get to the levels, the faster we'll see the selling. The slower and healthier we grind up to those levels, the more likely we don't need to see a huge wave of selling after we get there. So let's go back to the monthly chart on the NDX, and you can see that we're not even close to the upper Bollinger Band on the NDX. So there's plenty of upside on the NDX to get to these price targets, and we are still in a very strong bull trend. So don't try to call a top, just be very aware of these levels and understand the faster we get there, the more defensive you're gonna need to be with your trading, and the less long positions you should be taking with high leverage positions like call options. Jumping over to the Dow Jones weekly chart, we can still see that we had a very bullish close on the week, and we're still in a very strong bull trend. We did close above the upper Bollinger Band, but those will expand going into next week. If we jump over to the monthly chart, you could see that the Dow Jones is already trading over the upper Bollinger Band for the month of April. That is very much like what we saw in the S&P 500, and it does mean that selling pressure will eventually come in and try to keep these prices within the Bollinger Bands for the month of April. So if we get that blow off top and we go up way too far this month, it's going to heavily increase the probability that we see a massive wave of selling before the month is over. So watch these Bollinger Bands on these monthly charts very closely, because they are starting to show that we're getting a little too far overextended on some of these indices. You could see that we're going up very much in a straight line ever since the bottom, and we continue to look like we're going into this parabolic rally on a monthly chart. Remember that the monthly chart is way more important than the weekly chart or the daily chart, and if we're getting too far overbought on a monthly chart, that is going to send the stock market into a correction or a consolidation. Remember that a correction could either go through selling or it could go through time where you get a consolidation and sideways movement, and that is equally a correction in the stock market. Both of these scenarios are considered a correction, and one is a correction through time and one is a correction through price. If you get a correction through price, you'll get drastic selling to the downside and then usually a nice bounce to the upside. You could see in this other scenario where you correct through time, you sort of chop around and you make lower highs and higher lows and you just go into a consolidation wedge. Either way, you end up at the same finish line. It just depends on how you get there. So keep in mind that if you're buying puts at these levels, it doesn't necessarily mean that the market has to have a huge wave of selling to bring to much lower prices. While that is very much a possibility in a blow off top scenario, don't forget that a correction through time is still a possibility, and those put premiums will decay over time because of theta decay as you continue to hold on to them waiting for that massive wave of selling. All right, next let's look at the Russell 2000 weekly chart, and we can see the Russell 2000 is already going through a consolidation wedge, and it does look like it's going through a sideways movement and correcting through time. Now we can note it's still in a bull trend and it still has bullish price action, but the price action is stalling somewhere around that 5 EMA on the weekly chart. If we jump over to a monthly chart, we can see exactly what's going on. Last month, the Russell 2000 was way above the upper Bollinger Band, and that triggered this consolidation and this correction in the Russell 2000. The small caps got way too far, way too fast, and now they're paying for it, and money is leaving those markets and going into the large caps, which already did have a correction, and there's much more upside left in those stocks. So we're seeing money leaving the Russell and going into the NASDAQ 100. If we see these sort of scenarios playing out in the S&P 500, or the Dow Jones where we get too far extended in the month of April, we'll see a very similar scenario that we saw in the Russell 2000. So going back to the weekly chart, you can see this a lot better, that in the month of March, we got way too far extended early in the month, and now we've sort of been trading down to sideways for the last 4 weeks. If I compare that to the SPX, you can still see that we're going up and we're getting parabolic, and that could trigger a very similar sign that we saw in the Russell 2000, where we see selling and consolidation. All right, let's also jump over and look at Bitcoin, and we can see that Bitcoin is currently trading right around $60,000, and it is trying to break out of this wedge. We see Bitcoin is still on a bull trend, and the price action is still above the 5 EMA, and we still have price targets above at 62,500 and 64,000. Remember that Bitcoin is getting very far extended on a monthly chart, so if we switch Bitcoin over to a monthly chart, we can still see that we're way above the upper Bollinger Band on a monthly chart, and that's why I really don't suggest trying to buy into Bitcoin at these levels. It doesn't mean it can't go higher, it just means that when the correction finally does happen, it could be a massive wave of selling and it could happen very quickly. So if you're buying Bitcoin at these levels, be very aware of how overextended it is and make sure you have some sort of exit strategy in case it does go through a massive correction. It looks like it could easily come all the way back down to about 50,000 or the 5 EMA, which is down around 47,000. If we start getting below those levels, things could get ugly and we could easily come back all the way down to the 30,000s. So know your risk and know your reward. And right now on Bitcoin, there's a lot more risk than there is potential reward. That's the way I see it when it gets too far extended. And on this weekly chart, you can still see that it is still trying to struggle to break out. And we still have to see where this week ends up. Just because it's breaking out currently doesn't mean that the breakout will last. And you always have to be cautious of a false breakout scenario. So just a quick recap on the SPX, we're looking for a price target of about 4152 to 4306. Keep in mind that the 4306 level is more likely going to be the blow off top scenario, where we see the Dow Jones and the tech sector in the NASDAQ 100 going up way too far, way too fast, and we continue to just go up parabolically. That could lead to a massive wave of selling in a blow off top scenario, so be prepared for that event. If we do see selling and a correction, we could come all the way back down to these support trend lines, which we did break out of back in November. So from that next price target down to that trend line, that is about an 11% drop, which is pretty normal for a stock market correction. So keep in mind, the higher we go, the more likely we're getting closer to that day where we're finally going to see a stock market correction. Remember, we did not already see a stock market correction. What we just went through was a sector rotation, and that was just money moving around, and we saw a lot of selling in the tech sector and the healthcare sector in favor of the financials and industrials and energy sector. That sector rotation was a tech correction, but not a stock market correction. In a stock market correction, we're going to see the whole entire stock market coming down, and it's most likely going to happen after we hit one of these critical price targets. It's very unlikely that the stock market continues to go up in a straight line forever, and you can already see that for the year, we're already up quite a bit. From the closing price in December to where we currently are now, we can see that the S&P 500 is already up about 10%. Typically speaking, the S&P 500 goes up about 8 to 9% on average, and we're already over that average. It doesn't mean we can't go higher. It just means that we're already having a relatively decent year in the S&P 500, and a lot of the risk is now going to be to the downside. Remember, the higher we go, the more likely we're going to see sellers, because eventually they will want to lock in those profits, and that could lead to a massive wave of selling, which could bring the S&P 500 back to the mean. So just be aware of your risk, and remember, we're still in a bull market, so you can still find bullish trades and you can still make money in this market. Just be aware of your risk and beware of your reward, and make sure that you have enough reward to make up for the amount of risk that you're taking on in your trading. Also remember, on the Stocks Channel Discord, I'm giving intraday updates on the market to help you stay on the right side of the trade and bringing you new trade ideas weekly. If you're interested in the Stocks Channel trading community, you can find out how to join by clicking on the link in the description of the video. So I hope you're all having a great weekend and looking forward to a great trading week coming up. And as always, I will see you in the next episode.